Hello, everyone. How are you guys? Hopefully, you are all well. I'm here with my buddy, Aperture. Hey, man, how are you?
Hey, hello. I'm looking forward to this webinar
Yes, it's
because
very interesting. Hmm?
it's we're going to talk about raindrop candles, and I think TrendSpider is so unique in providing these where you have an overlay of volume and time on your chart. But I'm sure Jake, who will be joining us, uh, can talk about this a lot and give the insights on how they work.
Actually, you just destroyed my plans because I was planning to have an introduction about raindrops to be more poetic, speak about the weather, raindrops, etc. But yeah, okay, you are the technical analyst. Very, very, yeah.
Well,
Anyway, so
it fits the seasonality part of the webinar too. Yeah, so it's definitely poetic, but let's welcome Jake on the stream.
Okay, after this clip, we'll be right back, guys. Stay tuned. And we are back. And at this moment, you can see Jake Wojastik from. Did I pronounce it correctly? Yes.
Yes,
I
you
think
did.
so.
Perfect.
Awesome. Welcome to the Birb Nest.
Hey, thank you. Thank you guys for having me as always.
How are you? How's the weather there?
That's I don't think it's rained in Denver for 6 weeks, so it is very dry and really warm for this time of year. So I'm not complaining quite yet. I do enjoy the winter, but not much of a
But
winter.
we are going to talk about raindrops. Yeah.
Yeah,
So,
no raindrops in Denver, but we will talk about raindrops on the charts today. So
awesome. So before we start, would you like to give us a brief intro, who you are, how you started with crypto, and what TrendSpider is?
Yeah. So my name is Jake Wojastik. I'm one of the founding team members at TrendSpider, and as the company has grown and evolved, my position at the company has changed as well. But for the most part, I really work with partners and helping them understand different ways to use the platform and really see the market in a new direction and new perspective. So really, my job is evangelizing the product to customers, partners, anybody that really wants to learn how to use the platform and kind of see the market in a different way. Now, I personally don't trade crypto. I look at it literally constantly because for me, it's a risk on sentiment indicator for the financial markets around the world. So I'm constantly looking at Bitcoin, looking at Ethereum, not because I'm trading it, because I'm using it as a proxy of risk on, risk off sentiment in the stock market, which is something that I've been trading for about 16, 17 years. So crypto is a big part of the way I look at the markets. It's just not something that I actively trade. And yeah, I'm excited to kind of go over how you can use raindrops, seasonality, and other tools on the platform as well to get an idea of where prices may be going due to how some of these tools are used.
Awesome, sounds good. And I can see. Should I bring your screen to show us? I guess you have.
I think I'm sharing it.
Yes, you are, and I can see. Okay, so you have a few slides to explain to us what a raindrop is, the raindrop chart. Yeah.
Yep. And so, the raindrop is probably one of the most proprietary features on the platform. It really allows you to see volume in a new light. So if you're typically looking at a daily candle, you can see a volume bar at the bottom. The volume bar measures how much volume came in for that day. Now, what the issue is, that volume bar does not tell you anything about where that volume was located. Where was a majority of that volume occurring within the daily candle or the weekly candle, whatever time frame you're on. And so what the raindrop does is it kind of erases that inefficiency of having to go into the 1 minute or the 2 minute or the 5 minute chart to start looking at where those shorter term time frame volume bars were taking place and at which price. the way I used to look at this is I'd go on a 2-minute or a 5-minute chart. I'd look and say, okay, well, you've got a pretty big volume node here and here. And then I would compare and say, okay, well, there's a lot of volume that happened at this price on the 5-minute chart to get an idea of where volume was kind of occurring. But the Raindrop completely eliminates that manual process, and it allows you to see the volume profile on the candle. So there's 2 layers to the Raindrop. The first layer is pretty similar to a bar chart. So if you're familiar with the bar chart, you have 2 bars, a left bar and a right bar. The left bar is your volume weighted average price on a Raindrop instead of your open on a typical bar chart. Now, the volume weighted average price on the right bar is essentially the volume weighted average price for the second half of the time frame you're looking at. So the left bar, first half of the day, let's assume this is a daily candle. The right bar is the volume weighted average price for the second half of the day. So that's the first layer, pretty similar to a bar chart, except it's volume weighted average prices rather than open and close. But then you also have the volume profile overlaid on top of the candle's range. So there's no difference in the structure of the candle from, a high and low standpoint. So the high of the day and the low of the day is still the same, or high of the time frame, low of the time frame. What's different is across that time frame, you'll actually see this curved line on the left, and then this curved line here on the right. And that's actually the volume profile. That's measuring how much volume aggregated at that price level on that time frame. So here you'll see on the left-hand side, you'll see this little bulge of volume at the bottom. We know that a majority of volume occurred right around that lower part of the day's range in that price zone. And then on the right-hand side, you'll see that there's quite a bit of volume profile going all the way up to the top of the candle. And that means that volume started to come in and actually price was hitting new highs with this volume. Simply due to the fact that you have pretty much a flat volume profile on the left. So anytime the volume profile is flat on one side, there was no volume that took place on that time frame. So here we know that during the second half of the day on this right-hand side, there was volume pushing up price. There was likely buyers getting pretty aggressive. And that's how you can really distinguish how these work. And I'll go over an analogy here in a second to kind of go over how to really understand what's happening within these volume profiles. So there's 3 different colors, and these are just the default colors. If you get on TrendSpider and you wanted to change the bullish Raindrop to purple or whatever, you could do that. But by default, the bullish Raindrop is simply just when the volume weighted average price for the second half of the candle is higher than the first half. So that is your classic bullish Raindrop, and it's going to be green. The neutral Raindrop, you can call that purple, blue, a mix of both. That is when the volume weighted average price is equal on the first and the second half of the candle. So it's essentially a volume weighted doji, and it really can be useful when you have potential reversals in the market. And I actually have a active case study right now on that on PayPal that we'll go over. And I trade the markets on the stock side a lot, but I always do crypto as well. But some of my case studies will be on the US markets, even though a lot of the time supply and demand is more in its raw form in crypto, just because it's just such a it's such a natural market. You don't have the Fed stepping in or anything like that in crypto like you do in the equities markets. Bearish Raindrop is when the volume weighted average price during the second half of the candle is lower than the first half. That's going to be red. And these are the 3 colors that you'll see on a chart when you initially turn on a Raindrop chart on TrendSpider. And as I mentioned, you can change all these. If you don't like the purple, you can change it to orange. You just right click on it, go to properties, and change the color. So, these seem cool, and, in theory, how the heck do I use these? There's really 3 different types of ways to use them. So the first way is to really look at a regular candle. So anytime I'm looking at a Raindrop chart, I almost always have the just hollow candle chart on the right side, the Raindrop on the left. So I'm kind of splitting the screen, and I'm looking for discrepancies between the candle and the raindrop based on where that volume is located, especially within candlestick wicks. And I'll go over an example of that here shortly. Now, the volume flow around resistance and support zones kind of touch on the first point, where you really want to look at, is there volume backing, a move above a resistance zone? And so I have a couple examples of how to use that and really utilize that in both the crypto markets and the equities markets. Now, Forex, I'm not sure if there's some Forex traders on here. Volume is very hard to deal with on Forex. And so I haven't done anything with raindrops on Forex, and I just don't think they would be as powerful just because you do have such a weird way of reporting volume in the Forex markets. Now, the last one is looking for discrepancies between candle colors and raindrop colors. So if you've got a red raindrop, but you have a green candle, which one do you look at more? So that's another one that's really interesting to see the discrepancies and almost a new type of divergence. So, that's kind of the background of raindrops and how to use them. And I can go over a couple of case studies. If you guys have any questions off the bat,
I have a question. You have worked with trading analysts a lot, I assume, and then you presented the whole solution of what a raindrop chart is very, very well. Let's say an average trader, how long do you think needs to actually get familiar with the whole concept and the notions in TrendSpider?
For raindrops, or just in general, the whole platform?
Not the whole platform, but the overall, the overall concept of the raindrops chart. Is it a matter of days? Do they need, a month? Not exactly, but roughly.
That's a good question. It really depends on the background that they have. These are very, very supply and demand focused. So you really need to have a good grasp of supply and demand curves. If the supply curve shifts to the right, what does that do to price? Because that is what it's really showing. And the raindrop is essentially showing not if there's volume, if there's buying volume, or if there's selling volume. I personally don't believe in buying volume or selling volume. Why? Because if you go buy something, somebody is selling it to you. So you're always going to have a seller and a buyer for every single transaction. The point of the raindrop is to show where conviction is by buyers. And this is kind of where I can share that analogy. And I'll have a example here pretty quick right after this to go over what I mean by this. But look at the market as like a sponge. So if you have a glass of water and you have a dry sponge, look at the water as supply on the market, and look at the sponge, the dryness of the sponge, as your demand in the market. If you have a dry sponge, let's assume that is really strong demand in the market. So when you pour water on that sponge is going to kind of start absorbing that water. You're still pouring water on it, but since it's dry, that sponge can kind of absorb that moisture, or in the case of the markets, that demand can absorb that supply. So if you want to go sell 1 million shares on the open market and somebody's there to buy those shares at the price you want to sell it at, the current market price, that is that dry sponge kind of absorbing that water. And I'll show you guys an example of this kind of on a Bitcoin chart here. So as always, you want to split the screen and you want to have the raindrop on the right, the hollow candle on the left. And one thing that you really want to do is you want to kind of see the volume, in the candle. And let me try to find a good example of this with a wick. So I was going to touch on this one here, but there's not too much of a wick here, but kind of the same point though, right? So like if you have a big impulse candle like this, it's assumed that it's bullish. But what you really want to do is you want to see within the raindrop, you can see this green shaded area kind of highlighting the same candle, just raindrop form versus candle form. You really want to see volume supporting price at the top of the range. And so, you know, that's the main thing, because if you don't have buyers willing to absorb supply, then that's a problem. And like the way I look at it, and I mentioned in the one of the 3 ways to use it, you want to look at it through breakout points. So for example, here, when we broke out of this downward sloping resistance line, a zone pretty much, you can see a majority of that volume was essentially aggregating at the top of the range. And so anytime you've got a bulge of volume like that, that is a strong indication that there's conviction by buyers. It doesn't mean there's no sellers, because there has to be a seller for every buyer. But it tells us that for those sellers coming on the market and selling that supply, there are buyers that are willing to buy that supply right at that current price. So that's kind of the main thing. And so to go back to the sponge example, here's an example on SPY, pretty much before we had a really strong day back in late September. And so what you can see is, I'm going to highlight the candle here. What you can see is, notice here, you've got a wick, right? So this candle right here, it's still closed bullish for the day, but it still has a wick. And the way to look at this is not that wicks imply selling pressure at the top of the range, because a lot of people look at a candle and they'll say, oh, there's a wick, so sellers came in towards the end of the day and pushed the price down. But the raindrop will help you kind of decipher, is that really what happened, or were those buyers, those aggressive buyers, just done buying for the day? And that's where supply and demand curves really come into play here. Understanding, you know, that prices can move down if demand decreases from its original equilibrium. So I know most people hate economics, and you know, it was definitely a little dry there when I first started. But then when I started understanding how these supply and demand curves can be applied to the markets, it's one of the most fascinating things you'll ever see. So here, what happens is you have a lot of volume at the top of the range. So when you have a lot of volume at the top of the range within this wick, that tells me that essentially you had buyers stepping in and really pushing the price up. Now, it's not necessarily that there weren't sellers. It was just that when the price was moving up, any of that supply going on the market was immediately gobbled up by buyers. And that's what this bulge at the top of the range indicates. Now, what happens is when those buyers are done aggressively buying for the day, or whatever time frame you're on, the price can move down, not because any increase in sellers occurred, but those buyers kind of stepped back and the demand curve shifted back, less quantity demanded because that aggressive buying was done. So if you have that sponge, you're pouring water on it. This is when you have essentially that dry sponge. You're pouring water on it. It's absorbing. You can see that bulge at the top is essentially that sponge absorbing that water. And then you can see, you know, especially within a wick, that tells us that it was likely just really aggressive buyers rather than sellers coming in. Now, if you go to another example, this is kind of the opposite. This is a chart on NMDM. This is another good case study on the blue raindrop reversal as well. But you can see here on NMDM, I like to use anchored VWAPs a lot. So essentially the volume weighted average price from a specific swing high or swing low in the market. And you'll notice here that we finally broke out after being rejected here multiple times. So 1, 2, 3, and then we finally poked through in early November. But notice it's the exact opposite here. You have literally no volume at the top of the range. And to me, that shows me that, and notice here, we've got the wick. Here, there is
no volume on the top of the range of the right side, right?
Yeah, there's no volume. Yeah. So that means that the price likely moved up on a pretty illiquid market. You know, maybe there just weren't a ton of sellers at the current price. You had someone come in, push the price up. But immediately when sellers saw, oh, wow, the price is up, I'm going to start dumping supply on the market. There were no buyers there to absorb that supply. So the price had to drop. And this is where you have your wet sponge. If you pour water on a wet sponge that already has a ton of water in that sponge, the water is just going to drip out of the bottom because the gravity is taking over. The sponge can't hold any more of that water. So this is what happens. The price has to drop in order to find those buyers. So this is a way to visualize, is there actually conviction during a breakout or even a breakdown? And it's really just incredibly powerful because you can see all of this in a single candle rather than having to go into a 5-minute chart and decipher all these individual volume bars.
I think this is a really good example of how you can spot a fake out. I think a lot of people I teach are often afraid of fake outs, and they ask questions like when it's a valid breakout. And this example shows that if there isn't that follow through by buyers, not much volume. And I think it also shows a good example in the Raindrop charts where there's that initiative for sellers again. I think on the candle after that low volume top, there is on the first half, there is that volume. And then on the second half, there is again that volume. So it shows that in that second day, the sellers took initiative and pushed it even down further. And if you want to look for confirmation, I think such a candle is even a better confirmation that it was actually a fake out here.
Yeah, I mean, Tesla was a great example of this last week, where you had the same thing. You had this resistance zone here. You finally broke out and you had all of that volume backing price above the resistance line. So there was conviction by buyers for all of those people coming in and saying, oh, we're breaking out. I'm just gonna sell to these breakout buyers. Those breakout buyers had enough conviction to actually say, okay, well, I'm willing to take those shares, in this case, Tesla, those shares at this price. And that's how you have this volume forming at the top of the range. And that's kind of your dry sponge absorbing that water and kind of getting bigger. And that's how you can kind of decipher how to look at this volume and how it works. So the market is really a sponge, and how dry that sponge is a function of how much demand there is in the market. So any questions on that before we kind of start going into maybe a little bit of the seasonality side of things and being able to use all of these things together? Because seasonality is not really a technical tool. It's just a historical data point that could be helpful, could not be helpful on its own. But then when you start kind of mixing this and seeing other variables in play on the technical side, it can be pretty useful. So crypto is one of those things that sometimes seasonality works really well, and sometimes it absolutely has literally no impact at all. So one thing on Bitcoin right now that I find pretty interesting is the weekly setup here. So I'm a pretty big fan of divergences. I know Birb likes to use divergence a lot of the time. I use divergence on the
Aperture had a private live stream 2 hours ago.
Yeah, just explain the members in the Birb Nest what divergences are on the RSI, but in general, you can use them on other indicators too. So they should be able to follow you here.
Love it. So this is a really kind of interesting place in the market for Bitcoin, because Bitcoin does move with the Fed, right? So like the Fed just came out with news right when this presentation started. I don't know what exactly they said about inflation, but based on the fact that Bitcoin just bounced, and most of the growth names that I have on my watch list, that's what I'm looking at right now. Most of these growth names that I'm looking at moved up. Most of the markets are almost doing a red to green move right here. Something tells me that the market liked the inflation data, and that's probably why Bitcoin is bouncing a little bit here. So you always have to look at the Fed, and if the Fed is still being accommodative, or inflation is maybe not as bad as they anticipated, that can always change the charts. The chart is just a path and a roadmap for you to get an idea of what could happen. So this is kind of an interesting example, both on the weekly and the monthly chart. You have two forms of divergence here. So one, I use the Williams percent range. And so the Williams percent range is essentially a highly sensitive RSI. And based on, and the same thing with RSI, I change my inputs depending on what time frame I'm on. So for example, if I'm on the, and this is different with crypto for the daily chart. So on crypto, you've got 7 trading days. So you probably want to use a 14 period RSI because you've got 7 trading days each week. And I usually want to look back 2 time frames. So on the weekly chart, I'm going to use the Williams percent range 8 because I want to look back essentially 2 months of data. And so, you know, based on the time frame, that input will change to essentially optimize the chart. So what you have here on Bitcoin is you have essentially double negative divergence. So regular negative divergence would just be one point in time where you have higher prices. So you can see here, here's our initial price. You can see this was our top. And then the next one up here is the new high, but notice that we hit a new low on the Williams percent range, or a lower high, excuse me, on the percent range. So that's kind of your first divergence, and it did not play out. We continued to move higher. But now you can start this candle here, this high, and apply it to this close 2 weeks ago. And once again, you have a lower, you essentially have a lower high on the percent range, even though we hit and closed at all-time highs on the weekly chart. So anytime you kind of have double negative divergence, it can be an interesting kind of inefficiency in the market. And a lot of the time this will play out. You can see it did play out pretty well. You know, we dropped from 66K down to around 55.6. And now is kind of the time. Is the divergence, has it played out? Has it not? My guess is it may have a little more room to move down, but generally when you have this big of a candle and the market is kind of holding up, it's really hard to tell. And that's why I will never be out here trying to predict prices. I take price action into account and say, okay, well, this thesis played out or it did not. So here you've got this set up, but then if you go to seasonality, you can start using seasonality with this setup. So going into December, pretty much since 2014, that's as far back as the data can go. I'm using the Coinbase Pro data for Bitcoin. Since December of 2014, there's only a 33% win rate. That's essentially means that 33% of the time, December closes higher than November's close. So what this means is it means that over the last 7 years, December is the second lowest win rate, meaning kind of the second weakest month from a historical seasonality point during this time. So you have the technical setup. You've got this divergence playing out. You've got the volume weighted average prices from the June and the July low, which has acted as support in the past. So you can see here we bottomed out there before reversing. So this is one of those things where the Fed is really influencing the market right now. And it's influencing every facet of the market, Bitcoin included. And that's, I guarantee, why you saw a little bit of a pop from that 55.9 to almost 56.4 in the last 20 minutes because the Fed came out with their inflation data. And I don't know what they said. I'll have to go and read it. But just based on price action, I can assume that the market didn't hate it. So you always have to keep the Fed in the back of your mind here. But this is how I like to use the technicals and the seasonality together to get an idea of where the market could go. So if you're a swing trader or position trader, you probably want to use the monthly time frame. So that means that we're measuring each month of the year and measuring what is the win rate. Or you can go in and you can actually measure the week of the year. If you want to see if there's a particular week of the year that's incredibly strong, you can look at each individual week. If you're more of a scalper, someone that's day trading every 10-minute candle, you may want to look at the hour of the day seasonality, and you'll see if there's a specific hour of the day that has a higher win rate than another hour. And that could be due to different markets opening around the world, those types of things. So you can really do a lot with seasonality. And one of the big things about seasonality is you need to have a start point. So you can't just say, oh yeah, the seasonality since what the start of Bitcoin is this. You generally want to look at seasonality as a function of a trend change or the start of a year, some type of benchmark. So like if I'm looking at the hour of the day seasonality, I don't, July is a pretty random month. And most of the time, so hour of the day, you can only go back to July. Day of
So
the
it's more
week
to
is,
find a valid reference point in time, right? That makes sense.
yeah. So hour of the day, you can only go back to July because that's just a lot of data points. But if you do day of the week, that's when you could anchor it from like the beginning of this year. So you could say since the beginning of 2021, what is the win rate for Wednesday? And you can see Wednesday has a 43% win rate. That means that 43% of the time it closes higher than Tuesday's close. So for hour of the day, you're going to want to use like maybe the start of the month. So, since the beginning of November, is there a particular hour of the day that performs better? And you can see there's some pretty big discrepancies here. The third hour of the day only has a 22% win rate versus the 8th hour of the day has a 61, or the 19th hour of the day has a 74% win rate. So you can really see, using some of these different starting points, where exactly is there an edge that I can get using this seasonality? And you don't want to just use seasonality on its own. It's not like, hey, there's a 74% win rate during 1900 hour for Bitcoin. I'm going to go all in. It's okay. There's a 74% win rate. There's a bull flag forming on the 30-minute chart or the 10-minute chart. And you can start using that type of thesis to kind of get all of your variables in a row and see, okay, this checks off, this doesn't, this checks off. So if you have seasonality and technicals agreeing, you just have a little more conviction in your thesis. It does not mean X% of the, if there's a higher X% of the time that has a higher seasonality, then that's going to perform better.
It has to work, from what I understand. It has to work as complementary to your trading strategy, right? As a complementary element, not the other way around. Check the seasonality and go blindly and sell your house and put all the money in there.
Exactly. So we talked about the divergence on the weekly chart. Now the monthly chart for Bitcoin also has divergence. This doesn't mean that Bitcoin's going to crash or anything, but it's worth noting it's an inefficiency where the price is not being confirmed by the Williams percent range. And here you could go back and you could essentially use, I like to use the 12 for the Williams percent range because I'm essentially looking back 1 year. So 12 months in a year. I like to use the 12 for the monthly, the 8 for the weekly, and then the 10 for the daily, because there's 10 trading days in a week for the equities, but on Bitcoin there's 14, so you'd want to use the 14 period. So anytime you're using an indicator, you want to make sure it makes mathematical sense, right? If you're looking at a 14 period RSI on the daily chart for the stock market, you're essentially looking back 2 full trading weeks and then 4 trading days. It's a completely arbitrary number. And the only reason people use it is because that's the default that the RSI was created on. But it's no different than using an hourly candle in the stock market. There's 390 minutes in a day. If you divide that by 60, you actually have 6.5 hourly candles in the US markets. It's just, you don't have an even amount of candles. So one of the hourly candles you're looking at in the US markets during the day is half of a candle. So same reason why I like to use the 65-minute candle, because if you divide it by 390, you get 6 even candles for the day. So a lot of the things that I look at are really based on a mathematical standpoint and if it makes sense. So we're looking at the monthly chart. We're on the Williams percent range 12 to essentially do a 1-year look back. And you'll see here that we do have that divergence. You've got this lower high, and you actually kind of have this double negative divergence here too, where initially, if we start from this point, that was your high, to here, this was a new high in price. But if you start from this point here, which was that high, and connect it, you're actually moving down to this lower high on the Williams percent range. So technically, this also has double negative divergence, not an end-all be-all, but it's interesting to see that you have the technical setup, but then you also have, if you look at the monthly win rate, a pretty low win rate going back since the data started. Now, I generally want to go back since around 2016. I mentioned 2014 before, but 2016 is kind of my point in time, mainly due to the US markets. So if you look at the US markets, let me just go to that and kind of show you why I'm starting it from 2016. So the US markets back in 2014 to 2016 pretty much did absolutely nothing, right? They traded in a range for about 2 years. And so the beginning of 2016 was when we finally started to move up again. And the reason why you want to go back to 2016 and maybe not since the COVID low or the 2018 low is because you don't have enough data, right? If you're just looking at since March 2020 and you're looking at a monthly candle, you only have like 1.5 data points for most of these months. Whereas if you go back since 2016, you've got 5 data points. Still not a ton, but a lot more than 1.5. 1.5 data points is not going to be statistically significant at all. But that's kind of why I mentioned that I go back since 2016, because that's really when the markets bottomed and started this continuation up in this really strong trend. Even though we did have some pretty big blips in the radar, the trend has overall been very much to the upside. So that's why I use 2016 in a lot of my seasonality analysis. But then I also, for the equities markets, I don't really use that for Bitcoin, since if we're looking back since the financial crisis, that's when Bitcoin was literally just starting to, be a thing. And so the financial crisis is also another one that I like to anchor from. So starting that, because that's really when this massive bull market started. And you could argue that, the COVID drop was about a 2-minute bear market, but overall, this trend has been very much intact. So I want to know, since the start of that trend, how has seasonality performed? And you'll see that, at least for the markets, November and December are very, very strong times of the year for SPY as well as IWM, which is another risk on, risk off asset that I use. So back to Bitcoin, I just wanted to kind of explain that's why I generally use those anchor points starting from 2016. That's kind of where I get that. That's where I get that logic from. And look at this. I mean, Bitcoin's ripping. I'm assuming, if I had to guess, the market's probably ripping as well with this. Yeah. So most of these growth names are definitely making pretty strong moves today, because growth names are also a risk on, risk off indicator. If Bitcoin's doing really well, almost guaranteed that your higher risk equities names are also doing well, because it's just that risk on, risk off. IWM is what I follow for that type of thing. Now, if we wanted to go to other markets, Ethereum is one that actually has a very different win rate than Bitcoin. And this is where things get a little interesting. You've got the divergence here, and you can essentially see that going into December, Ethereum has an 80% win rate since 2016. So you do have some weird seasonality differences between Bitcoin and Ethereum, which are kind of the two proxies for the crypto market. Some would argue Solana is definitely getting up there as kind of a risk on, risk off proxy. I essentially have Bitcoin, Ethereum, and Solana on my watch list to get an idea. The rest of it's just noise, in my opinion. Those are the three essentially pairs that are most valuable for me to get an idea of, is risk on or is it risk off. Any questions on seasonality or how it works or anything like that?
No, but I was checking it out on my TrendSpider just
Nice.
now, and I think it is an awesome tool also for knowing when not to trade. Maybe if you're in doubt, and you see next month or next day is in general a little bit of a bearish one, and maybe this month is really good, you can be a bit more aggressive in taking profits and taking that risk off. And I think that information helps a lot in managing that risk. And I think a lot of people forget that a lot of tools aren't there to provide you with the best signals. But these tools can be there to at least manage your risk and maybe take a step back in the market. So that's why I love this. But I also love like that 80% in December for Ethereum, because that's my thesis too. Not specifically on seasonality, maybe a different kind of seasonality where, you know, Ethereum didn't have the big run after Bitcoin, which is, you know, more of a market cycle in crypto. But it's good to also see some data support that too. So that's definitely awesome to see.
You know, and it's always fun to talk about theory and all that, but I want to go over an actual real life example that I used this month. Like I said, I'm always trading the stock market. I'm using crypto as an indicator, but I'm not using it to trade. This is a real life example that I used to have a ton of conviction during the beginning of November. So IWM is kind of your Bitcoin of the US stock market, because it is your risk on, risk off indicator. And so what was interesting was going into November, you had a lot of technical things aligning. So I didn't touch on the volume by price, but this is something that I use in almost all of my charts. If you guys kind of follow my personal page or TrendSpiders, we use the volume by price a lot. It's, you know, some people call it the VPVR in TradingView, but the nice thing about TrendSpider is, you know, if you're on TradingView and you want to measure the volume as a function of price rather than a function of time, so you're measuring each one of these volume bars is essentially is measuring volume at a different price. This allows you to say, okay, well, I want to move my anchor point, very similar to how we just discussed seasonality, where you want to start it from a specific point. You don't want to just start your volume by price from some random candle back in 2016, because, you know, there's no significance there. I want to start it since the COVID low. This is when the market reset. And I want to know, since the market reset in 2020, where is a majority of that volume kind of aggregating? Kind of similar to how the Raindrop works. And so here you'll see, one, there's a ton of volume supporting price up here. Now, you also have about 10 months where the price did nothing. So it's logical that you'd have a lot of volume aggregating here after 10 months of pretty much going sideways. But there are times where you'll see that candles are trading 10 or 12 or more candles in a row, and you actually don't have that much volume supporting price there. So this allows you to essentially see, okay, there is volume supporting price within this bull flag. So that was thesis number one. You had volume supporting price. Thesis number two was that you had this longer term breakout here on the 20-year chart. So pretty much going back since August of 2000, when I started this resistance line, you can see that, you know, we really had trouble getting through this resistance zone for the last 20 years. And then finally, back in January of 2021, we broke through it. And for the last 5-6 months, we've kind of been creating this bull flag. So previous resistance turning to support is thesis number two. So you've got an SR flip. Thesis number three is you've got a bull flag pretty much flagging into this previous resistance, now support. That's thesis number three. And to top it out, going into the seasonality, if you're looking back since 2009, or you could do 2016, but 2009 is just more data to go off of. Since the financial crisis bottom, November had a 92% win rate. So you've got the technicals aligning, you've got the seasonality aligning, and this is what gave me a lot of conviction in the market going into November, and definitely was one of the best trading months I've ever had in my life, because I knew, okay, I can press it now. We've got everything aligning. You've kind of got all the boxes checked here, and it really just can help you get a little more conviction in your trade. I didn't personally straight up trade IWM, but I used IWM as a proxy to see these individual names. Are they ready to move up or are they not ready to move up? And that was definitely a real life example that I used this month to really get an edge in the US markets, at least.
Quite impressive, actually. And I am absorbed with all this information you are providing, and it's really impressive, to the point that I also forgot to say to the people that are watching that we have a giveaway.
Nice.
I totally forgot. So, guys, there is a link in the description of the video. You can access the giveaway there, and this is the secret code to unlock it. It's Spider, and the giveaway for this live stream is 1 month exclusive access to the Birb Nest Club. So this is free money, and you get free knowledge, which is worth more than money. So go there in the description of the video, click on the giveaway link, add the secret code, unlock it, and take it from there. Yeah. So talking about giveaways, do you have any offers right now that Black Friday is coming for,
Yes,
TrendSpider?
We currently have a Black Friday sale going on, 60% off any plan, and I'll post that chat, or I'll post that link in the chat so you guys can take advantage of it. But essentially, just click the link and it will take you to the pricing page, and I'll post that in the comments. Or how can I send it to you guys?
Yeah, send it to us, and we'll make sure we post it in the comments and also in our Discord so people can check it out.
Yeah, because actually the platform right now and what you described really empowers your trading. It can really be a huge weapon in your arsenal when you want to get confirmations or actually identify specific patterns that are shaping.
Yeah, and like we haven't really talked about these features in TrendSpider, but I remember from earlier podcasts we did together, and from my personal use of TrendSpider, is that it's a tool that can automate a lot for you. So you can use different types of alerts on trend lines, on combined indicators. There is a market scanner in which you can give like different conditions, and it scans like all markets, and it's awesome. Like if you have some capital lying around, or you think the market in general looks good, and you can set some conditions, run it through a list, and it gives you a lot of charts. And I think that is such a amazing tool to have, and it removes a lot of the time just clicking through all these charts and see if the indicators are lining up. You just run the scripts or the alerts, and you're doing fine.
Yeah, and the scripts are a big thing, because most platforms, if you want to create any type of conditional criteria, let's say you're looking at the MACD and the RSI, and you want to know when the MACD does one thing and the RSI does another, and bullish engulfing candle forms, you generally have to know how to use some type of JavaScript language or some type of coding language in order to put that logic into a conditional format for the platform to understand what you're looking for. Whereas on the TrendSpider platform, all you need to do is you can create your own scripts. So instead of having to go in and learn a coding language or use a specific coding language for whatever platform you're on, some platforms have their own languages that you will have to learn. All you need to know is the conditions, and you have to know a little bit of Boolean algebra, which is just conditional formatting. So let's say, I name this potential breakout, and maybe my conditions are the MACD has to cross up, the RSI has to break above 50, and the 20 period simple moving average has to cross up above the 50 period. you can do that by just creating these parameters. So you go click condition, and you go to indicator. So you're choosing an indicator that is the daily, and just type in MACD. And so you want to know the MACD crosses up through the signal. So you want to choose MACD crossed up through the other indicator, which is just the daily MACD signal, which is your yellow line. So that's your first condition. The next condition would just simply be another indicator on the daily chart, and that's the RSI. So if you just type in R, relative strength will already pop up, crossed up through, let's say, the constant value of 50. And then the last one, maybe you want a moving average cross to occur. So you go to indicator, you go to daily, and you just type in moving average, and you see simple moving average. Let's just use the 5, crossed up through the other indicator, which is the daily. And let's just say we want to choose the 50. So these conditions have to be met. The MACD has to cross up through the signal, which is a bullish MACD cross. RSI needs to cross up through 50, and the SMA needs to cross up, the 5 needs to cross up through the 50 period SMA, in this case, the daily. And then let's say that you also need a confirmation of a candle. So you could add another condition or a group, and you could say, okay, all of the following conditions need to happen, but maybe any of the following need to happen. So maybe you list out 5 bullish candlestick patterns. So you'd go to daily, and let's do, bullish engulfing. We'd add the daily, maybe hammer candle. And then, you could choose any bullish bullish candle patterns you want. So then you need to have all of those first conditions to be met. MACD needs to do its thing, RSI and the SMA needs to cross. But then maybe for some extra conviction, you want to see one of the 5 or one of the 3 bullish candlesticks also form. And if any 3 of these occur, shown by this any of the following, that's when you'll actually get the alert. So it allows you to really create essentially a visual algorithm without having to go in and use a scripting language. So
and just I wrote a script, right?
Yeah,
just
right.
Like that.
Love it. Yeah, and it's something that maybe you don't really understand candlestick patterns yet. You want to get more into the candlestick side of things. You can go to patterns, and you can actually train your eye. So if you don't know what an engulfing candle is, and you want to look at different engulfing candles on Bitcoin, you click the patterns button here, and you can actually start training your eye. Okay, this is an engulfing candle, and actually start showing yourself how to do it. We also have the automated trend lines that allow you to do this as well. So, if you wanted to start training your eye on how different trend lines look, the system will draw trend lines for you. So you can, 1, train your eye to see different things, or 2, if you just don't want to go through 50 charts and draw trend lines, you just sometimes turn on the trend indicator to see if there's any trend lines that make sense that would fit your style. And you can change these. There's 3 different preferences. If you want to connect the trend lines from wick to wick or body to body, you can change this, click apply, and then the system will draw the trend lines differently. And then the nice thing is you can you don't have to have all these trend lines on the chart. You could just simply lock in this line, just I'm double clicking on these lines, turn off the trends button, and now we've got a simple pattern shown. So there's a lot of different things. I maybe touched on maybe 5% of what's on the platform. And if you guys want to check out more information on it, just go to TrendSpider.com, click on the link. Aperture, I sent you the link on Twitter. So if you want to share that in the chat, that's the link that they can click on to get the 60% off. And we have a 7-day free trial. So we don't want you to just see a presentation and have to immediately buy this without trying it out. You get a 7-day free trial. The sale ends in about 5 days. However, if you sign up today, you're locked into that 7-day free trial, and you don't have to pay anything, and you get the 60% locked into your account until the end of your trial. So it's something you can try. If you like it, great. If not, we appreciate you giving it a shot. But it has 100% changed the way that I look at the markets and in kind of my process at at identifying different patterns.
Awesome. Before we wrap up, because actually we only have 3 minutes and there is a live stream right after. Last question from me. Do you have any support community, that people can join and exchange opinions and experience how they use TrendSpider?
So we don't have anything like that, but we do have a support team.
Okay.
So, if you have any questions, let's say you sign up for a 7-day free trial, you write down 5-6 questions that you just can't figure out on the platform. You can set up a one-on-one demo with one of these customer success team members, and they'll walk you through the platform. But the most efficient way to do it is use the platform for a few days, come with a few questions, and then they're able to answer those questions, and you can use that 1 hour of time most efficiently, and really lock in on some of the things that you want to focus on. So we don't necessarily have that yet. It's probably something that is coming. I don't know if it'd be in the form of a Discord or what exactly that channel would be. But we do have the customer success team. We have a chat. We have hello@trendspider.com, which is our support email chat. So there's a ton of different ways that you can get in touch with somebody at the company if you do need help with any part of the process getting set up.
Awesome. Guys, we had Jake from TrendSpider explaining us seasonality mainly and the raindrop charts. Jake, it was an absolute pleasure. I'm going to watch this again. I'm pretty sure. I don't know if Aperture, you have any last comments before we go?
No, I'm just glad to see TrendSpider developing more and more tools that make trading easier. I hadn't looked at that seasonality yet, but I will definitely do it. And like I've been using it for all these scanners and especially also these VWAPs, these anchored VWAPs, because the data is really high quality. This confirms it even more that they're on the right path to, building even more and more amazing tools for trading.
Thank you guys. So it's always a pleasure to come on and do these and be a part of the CryptoBird Congress. So thank you guys for having me. And
pleasure.
And yeah, I'm looking forward to the next one.
An absolute pleasure. And guys, don't forget the 14-day Congress, the free Congress ends tomorrow. And we have a super surprise for you, a special treat. We have the giveaway. You can find the link in the description of the YouTube video, but maybe you have seen in our Twitter accounts, there is a treat starting tomorrow. So stay tuned and you will see what this is about. Jake, again, thank you so much. All the best for TrendSpider, and we'll speak soon.
Absolutely. You guys have a good one.
You too.
You.
See ya.
Take care.
Bye-bye.
Bye-bye.